Imagine getting paid every single month without punching a clock, without chasing clients, without even leaving your couch. What if I told you there's a way to collect $5,000 per month in dividends using one single fund? The NEOS NASDAQ 100 Covered Call Fund, a fund that currently yields an eye-popping 14.44%? Today, I'm breaking down exactly how much you need to invest, the risks to watch out for, and the fastest way to realistically build that dividend income stream. First things first, what's a covered call fund? The fund owns a basket of stocks, in this case the NASDAQ 100, and sells call options on them. The premiums collected, plus stock dividends, get paid back to shareholders like us in the form of monthly distributions. The draw? That juicy 14.44% yield. To put that in perspective, the average S&P 500 dividend yield is under 2%. With this covered call fund, you're looking at 7 times the cash flow. But as with everything, high yield comes with trade-offs, which we'll get to. Let's get to the fun part, the math. At a yield of 14.44%, here's what your investment would look like at different scales. $100,000 invested equals about $1,203 per month. $250,000 invested equals about $3,007 per month. $416,000 invested equals roughly $5,000 per month. So the magic number for $5,000 monthly is around $416,000 invested into NEOS NASDAQ 100 Covered Call Fund at today's yield. Now, before you panic and think, I don't have $400,000 lying around, stick with me, because there are faster, smarter ways to get there without starting from scratch. There are really 3 levers you can pull: capital, compounding, and consistency. Start with what you can. Even $10,000 invested today throws off around $1,444 per year, or about $120 a month. That's a utility bill covered, just from dividends. Reinvest dividends. By reinvesting instead of spending, your yield on cost grows like a snowball. For example, if you start with $50,000 and reinvest for 7 years at the same 14.44% yield, you could cross $125,000 plus without adding another dime. That's already over $1,500 per month in dividends. Add fresh capital consistently. Let's say you add $2,000 per month on top of reinvesting. In under 10 years, you could realistically cross that $400,000 mark and reach $5,000 per month. Now, this is where most YouTubers would hype you up and stop. I'm not doing that. You need to understand the risk before you throw money into a high-yield fund like this. Limited upside. Covered calls cap how much the fund gains in bull markets. You trade growth for cash flow. NEOS recently filed for a boosted version with leverage similar to the many in Canada that may help mitigate this. Dividend volatility. The 14.44% yield isn't guaranteed forever. Option premiums fluctuate, so payouts can go up or down. Concentration risk. This fund is tied to the NASDAQ 100. If tech takes a dive, both the fund's value and payouts could drop. So yes, it's powerful for income, but it's not magic. Always size your investment according to your risk tolerance. Covered call funds aren't for everyone. If you're 25 and looking for max growth, you might want to stick with growth exchange traded funds, but if you're looking for cash flow now, or you're in your 40s, 50s, or even retired and want income without selling shares, covered call investing can play a huge role in your portfolio. So here's the bottom line. At today's yield, hitting $5,000 per month in dividends with NEOS requires around $416,000 invested. The fastest way there? Start with what you have, reinvest those juicy dividends, and add new capital consistently. Over time, the snowball becomes unstoppable. But now I want to hear from you. Would you rather have steady dividend income from funds like this, or would you prefer to chase growth stocks and sell shares when you need cash? Drop your thoughts in the comments below. And if you got value from this breakdown, hit that like button, Subscribe for more smart investing content, and I'll see you in the next one.